Okay. Mau jam 4. Are we ready yet?
For another 1 minute. Hello, good afternoon, ladies and gentlemen. Welcome to the event today recovery. Let's begin for this special event of 2022 in the beginning of the first month of this year. We welcome the first event of International Federation of Technical Analysts, Southeast Asia. And today we will have Malaysia, Indonesia, Philippines, Singapore, and the others are many to come in the next event. And now we will welcome the opening from the president of IFTA, Mr. William R. Please welcome. I welcome Mr. Indra as the BOD of IFTA to have an opening speech, please.
All right. Thank you, Mr. Arya Santoso. Good morning, good afternoon, good evening. Assalamualaikum warahmatullahi wabarakatuh to all participation. Welcome. Thank you for joining our Market Outlook 2022 Breakout Recovery. To all participants today, my name is Indra Wijayarangkuti. I'm one of the board of directors of the International Federation of Technical Analysts, or we call it IFTA. Today, we're going to see the market outlook from the global market, Southeast Asia region market, by applying technical analysis knowledge. Here, we'll see our chartists, technician, analysts or trader from our region, Southeast Asia, that they will be presenting the market outlook 2022 with their expertise. And then lastly, the purpose of this webinar is to introduce to all of you how powerful and useful of the technical analysis to managing risk, investment, and portfolio. So let's enjoy this webinar. Thank you very much.
Okay, thank you very much, Mr. Indra Rangkuti. And for the next session is the first speaker will be live as Mr. Azizul MSTA CEWA. Let me introduce him that Mr. Azizul Hakimin is a certified technical analyst MSTA with the Society of Technical Analysts STA United Kingdom. He is also a certified alloy wave analyst who specializes in the alloy wave theory to analyze the price action. Having been in and knowledge in the equity, currency market, commodity, and also fixed income market. He is elected helping to produce MSTA and CFTE holders from 8 years of experience conducting more than 20 classes about technical analysis and allied way to about 200 students. Analyst Azizul Hakimin was a speaker for IFTA conference 2018. His presentation topic was Asia Pacific Small Cap Index View and Analysis from Elliott Wave Perspective, Elliott Wave and Fibonacci Interpretation to production of the Asia Small Cap Index. He also discussed how he applies the basic technical tools, including support and resist. Welcome, Mr. Azizul Hakimin.
Okay. Good evening. Assalamualaikum to all the participants. Today, I'll start this talk with market outlook 2022, a breakout recovery. So, I'll try to give my view on several indices in Asian Pacific region. So, I'll start with Singapore Straits Time Index, Bursa Malaysia KLCI Index, and Indonesia Jakarta Index, Jakarta's Composite Index. All right. I will give my view based on Ralph Nelson Elliott's view, Ralph Nelson Elliott's structure of market structure, and then my view is all about Elliott wave structure to find the next direction of our Asia Pacific region market, and also I give some cryptocurrency, give some view on cryptocurrencies on Ripple. So all my view is based on Nelson Elliott, but Ralph Nelson Elliott ideas. Okay, first of all, let's get some basic of Ralph Nelson Elliott's. What Ralph Nelson Elliott's studies of is a study of a market structure based on patterns. Ralph Nelson Elliott look at patterns in the market or look at the market and try to discover pattern and observe of a certain form recurring, right? So according to him, stock market prices trend and reverse in recognizable patterns, and he described how they are linked together to form a larger version of themselves, and how they in turn link to form the same patterns of the next larger size, producing a structured progression. Okay, as a market move from a low point to high point at the major, okay. Okay, as a market move from a low point to a high points, at the major turn, at the low to the major turn, at the high, it goes to certain form. So he said that form take the shape of 5-wave structure. Okay, this 5-wave structure has a forecasting value and could provide a detailed description of how market behave. So the primary value of this 5-wave structure provides a context for market analysis, and where it provides a basis for disciplined thinking and a perspective on the market general position and outlook, right? So the wave principle is governed by a man's social nature. In other words, they reflect this reflects the greed and fear of the human's behavior or psychological human behavior. All right. Okay. It's the expression generates form. So from this form, we try to get a direction of the next likely where the market is going. So okay, the 5-wave pattern in market progress ultimately takes the form of 5 wave of a specific structure. So three of this wave, which label 1, 3, and 5, affect the directional movement, and they are separated by 2 counter trend interruptions, which are labeled 2 and 4. And these 2 and 4 are apparently a requisite for overall directional movement to occur. So it is important to understand the Elliott wave structure, the patterns. Throughout this pattern, Elliottician tried to forecast the next likely direction. And then I have some sample of several patterns, including the motive or impulsive pattern and corrective pattern. All right. So what I show here is this is the basis of 1, 2, 3, 4, 5, the impulsive and corrective. Where this pattern, according to Rasmussen and Elliott, is the pattern that is a fractal. So from the smaller time frame to the higher time frame, we can find this kind of structure progressing. All right. Okay, some other structure that I want to show here is about a third wave extension, and this is the part of the structure, the diagonal structure and the zigzag structure. This is all the corrective structure, and the flat structure, the corrective structure, and the triangle structures. And then this the double zigzag structure means a corrective structure. All right. So from this, if you understand this pattern, you understand this structure, most likely we can predict or forecast the next likely direction. So based on this analysis, the Elliott wave, so we try to predict, forecast the next likely direction. So I don't take much time here, just to give, first of all, I want to give view on Singapore straight time index on the short-term basis. So this short-term basis on a straight time index, my view is bullish. So I think there is a one more leg push up. I think by this year it could be bullish for wave 3 up. So we base this on this this pattern, this wave pattern. So the problem with the Asia Pacific region now is if the correlation between Asia Pacific and the Wall Street, the Dow Jones, and the fear of the inflation that can cause the Federal Reserve to increase the interest rate, that cause the stock market or Wall Street to gradually decline. So this could interrupt our view, our bullish view on straight time index. So my view here, my analysis based here is based on my forecast, my forecast here. So we expect straight time index to continue higher. The correction could have ended, possibly, and price need to index need to push above 3,300 or above wave B area here, and to push higher to 3,600. All right. Okay, this is my view on straight time index, and we just support this with my 200 days moving average, where price index now is holding above the 200 days moving average. So it, I could say that I'm bullish for straight time index in the next 1-2 months, provided that Wall Street hold its what you call the interest rate from provided that Wall Street Federal Reserve to hold its interest rate. So that's the risk there, the risk of my view of a straight time index. So the correlation coefficient between straight time index and the Dow Jones, the correlation is quite high. It's about 0.88 0.88%. That means the correlation is quite high. If a straight time index will drop, possibly, if Dow Jones or Wall Street drops, possibly the straight time index might follow. Right, this is my view. So to conclude that the straight time index for me in the 1-2 months time, we are still bullish to higher to 3,600 or higher to 2,700. Okay, the next one, my view on Jakarta Composite Index. This is a daily chart, daily 2 days chart. So it's more or less this Jakarta Composite Index has a similar pattern to straight time index. So it could be bullish again, especially if prices now is retesting the high at 6693. Once there's a leg to wave 5 of 1. If this count is correct and a push above this 6693 can carry prices, can carry index, Jakarta Composite Index higher. And the structure here is a bullish structure, is an impulse 1, 2, 3, 4, and 5. So Jakarta for me is also short term is bullish to complete the wave 5 around 7,200 or 7,400. It could be the last push to 7,200, and that correction might come after this. But for 1-2 months time, I'm still bullish for this, especially if it managed to, if index Jakarta Composite Index managed to push above this the all-time high 6693 here, right? Okay. My view is only a short term. It's not a long term. So I give for 1-2 months. I call a view. One from now, right? 1-2 months view from now. Okay, sorry. Okay. The correlation coefficient for Jakarta Composite Index is also correlated quite positively with the Wall Street, around 0.8 something, 0.7 to 0.8. So the risk of this bullish view, if Wall Street or Federal Reserve raise the interest rate, gradually it may come down, right? It could be the last push for wave 1, major wave 1 here, all right? So we are bullish. And for now, Jakarta also is holding above the 200 days moving average. So I think generally it's bullish for this short-term bullish for Jakarta Composite Index. All right. Okay. The next one is FBM KLCI Index. All right. So the FBM KLCI Index is not like Singapore or Indonesia. We are in a sideways. In a sideways, we call it, what Ralph Nason says is a combination, means the sideways corrective structure. So we going nowhere, but we do not know whether this the index have ended, what you call it, the correction is ended here at wave B of Y and start to push up. So in Malaysia, I'm not clear where's the direction, but it's to conclude that we are in other words, we are neutral or sideways view for this sideways views for Malaysia, right? So Malaysia, but for long term, if prices, index manage to break above the trend line or above 1696, we are, for the long term, we are predicting that, forecasting the price can go higher to wave C around 1,700. But for now, we have no idea. So we take it as a neutral or sideways. All right. Okay. Okay. I have a view on CPO prices. So in CPO prices, if CPO is a crude palm oil prices, crude palm oil prices, the structure seems like bullish, right? So so far we do not know whether this can continue or not. If wave 5 have ended, prices for crude palm oil may do a correction around current level. All right. So we are not sure, but we are bullish for this one. But if in comparison with the soybean oil, we do some comparison. It doesn't look. Hold on, I don't have the. Oh, there's in comparison with the soybean oil, prices diverge. Means that with the weakening of soybean oil, and then oil is on the downtrend, and crude palm oil is on uptrend. So that means prices diverge. So it could be that crude palm oil could push higher, but I think the upside will be limited around maybe 6,000, maybe 5,500. All right. Okay. So to conclude for FCPO, we are bullish for now until we see a sign of a reversal. All right. Okay. The last one is my view on Ripple. My view on Ripple. Okay, my view on Ripple is crypto Ripple is I am I call it bullish on not to say bullish. I am neutral for now for Ripple. So I think Ripple is consolidating within the wave 2 area. All right. So I think we expect a triangle is in making. So they're most likely they are moving sideways, and it could be bottom around here, could be bottom or sideways. I think for long term, it could carry higher to around $2 to 10. Right. So I think the future prospect for Ripple is bullish, but for the short term is sideways, neutral sideways. So that is my view for my short brief on on the indexes, Asia Pacific region, my Ripple and my crude palm oil. So that's all my view. So thank you very much for inviting me to give my view on this on the market. So I pass back to Pak Indra. So thank you very much. Assalamualaikum.
Waalaikumsalam. Thank you, Mr. Azizul Hakimin, for the presentation. Now we are open to question and answers session. May I have your view, sir, about the CPO? Is it possible that the fifth wave is a truncated wave, that it could be a bearish view in the short term?
The short, just saying that around current level, if the comparison with the soybean oil is a negative, a bearish divergence. That means like soybean oil is going down, and then the CPO is going up. That means that we see a divergence between these two in a daily chart. All right. So it could be there's some, but some just read some news. They say that the short of workers that can cause the demand, short of supply or something that can cause the price to go up. So around here, there is a room to the upside around 5,500. All right. So if I'm wrong, the wave one here, it could be a wave 5. That means prices might drop. All right. So if this is wave 1, it could be wave A and this B, and then drop for C is possible. So we are any drop, if the limited drop, the drop is limited here around here. That means we are on wave 2. Then means that there's we can expect more upside. But in comparison with soybean oil, the divergence, the investor, the trader should be careful with this, because the soybean oil is diverged from the CPO. So around current levels, there is a critical area, whether it can continue higher or they are stopped here. All right. Okay. So I hope you can I can answer the question. I hope I can give you answer for that.
All right. Thank you. And for all participants, we welcome you to click on the Q&A button to put your questions. And then after that, we will convey it to Mr. Azizul Hakimi. And meanwhile, we welcome the opening speech from Mr. Willard Art as President of IFTA.
Mr. Azizul Hakimi, may you close or stop sharing? Yes, please. Thank you very much. Thank you very much. All right, we can share our president's speech, please. Thank you.
Welcome. Thanks for joining Market Outlook 2022 Breakout Recovery from our IFTA Southeast Asia member societies. I'm Vinand Al, CFTE and President of the International Federation of Technical Analysts. I'm more than happy to welcome you to this very special event. Some of IFTA's most renowned experts from Indonesia, from the AATI, from the Asosiasi Analisis Technical Indonesia, from Malaysia, the MATA, Malaysian Association of Technical Analysts, from Singapore, the TASS, Technical Analysts Society of Singapore, and the Philippines, STAP, Society of Technical Analysts Philippines, are excited to present their views of today's markets. Thanks to Indraviaya Rangkuti, Director of IFTA and member of AATI, and Arya Santoso, member of AATI, for the moderation of this great event. With this 2-hour event, IFTA wants to give you a better basis for your investment decisions this year, as well as a deeper understanding of technical analysis. At IFTA, we focus on the professional education of institutional and private analysts, investors, and traders. With more than 20 member societies and over 7,700 members worldwide, we offer a strong network of experts. As a member of one of our IFTA member societies, you have access to a broad range of resources for your personal education in technical analysis. Join our monthly webinars or discover our huge archive of recordings. Twice a year, we conduct a workshop to deepen your knowledge in a certain aspect of technical analysis. With the quarterly IFTA newsletter and the yearly IFTA journal, you have access to the latest thoughts and insights from the most renowned experts of technical analysis, investment, and trading in the world. The yearly IFTA conference takes place either online or offline in one of our member societies' countries and is one of our industry's highlights. Become a certified financial technician, a CFTE, and bring your career as an analyst, investor, trader to a new level. Or make a deep dive into technical analysis and apply for our Master of Financial Technical Analysis, the MFTA certification. But first, let's start into our very first market outlook from our Southeast Asian member societies. Enjoy.
Thank you, Mr. Willon Art. And now we still have an opportunity to give questions to Mr. Azizul. Is there any more question from the audience, please? You can click on the Q&A button, or you can raise hand and we will open your microphone. All right, as no coming questions at this precise moment, I would like to convey thank you very much for Mr. Azizul Hakimin for the session, for the presentation. And now I will introduce the second speaker from Philippines, Mr. Jonathan Ravella, CTA. He's a Chief Market Strategist at BDO Unibank, Asian Institute of Management. Please welcome Mr. Jonathan.
Good day, everyone. So my job today is to probably give you a picture of the Philippines in 2022. I've labeled my presentation as cautious optimism. So without further ado, let me go through my slides. So first things first, let's talk about the ominous Omicron. It seems that the new variant appears to be fast and furious. And looking at the slides between the global and the rest of the world, you're seeing Europe and the US actually hitting faster rates as compared to the Asia Pacific. So this is something that appears to be quite unique compared to the other countries. And using technicals, it seems that we're seeing this Omicron wave as part of a big wave 3. Now, when we look at it from an Asian perspective, you're actually seeing something quite different. There are some areas that are still showing low cases. Indonesia and Malaysia seems to be still low, while the Philippines appears to be leading the rise in cases, followed by Thailand. Now, but despite all of this, we've seen improving confidence, especially over the next 3 to 12-month period, which eventually is supporting the outlook of at least an increase in the chain of demand. So the expectations moving forward in 3 to 12 months time is that, again, if we're able to bring down the lower infection, consumer spending will likely pick up. And over the last 4 quarters of 2020 and 2021, we've seen a sudden surge of consumer demand or consumer spending. And this has eventually created a very positive impact on the growth rate. And if we were to base the 3rd quarter, which is the recent set of data in the Philippines, you're actually seeing a very good uptrend of economic growth for the region. Surprisingly, Philippines and Singapore are actually showing quite different signs, with the Philippines growing at 7.1%, while Singapore is actually at around 5.9%. So basically, the Philippines appears to be catching up despite the previous quarters. So hopefully, the outlook for the fourth quarter of 2021 will most likely show at least that the Philippine recovery is still underway. Now, one of the things that will eventually affect the rest of the market is the impact of faster pace of lift off coming from the US. So this is something that are now looking from 3 hikes in 2022. We're now looking at 4 hikes, especially after US inflation for December printed 7%. So if we were to sum it up, it's actually powering it up in terms of interest rates. So this eventually will have a great impact to the Philippine currency. And that's the reason why the near-term risks continue to highlight a potential consolidation at this time between 51 to 51.30. But with the further expectations of the dollar strengthening with the hikes, then definitely it will test the 51.75 to 52 levels in the coming months. So again, the chart in front of you continues to highlight the significant break of the downtrend line, and we've seen the slightly past the 51 resistance level. So headwinds, of course, continue to be driven by higher oil prices and eventually higher inflation. So this has been a challenge for most of ASEAN economies, including the Philippines. Although full year 2021 was 4.5, the challenge continues to be driven by this higher inflation in the coming months, especially on the outlook of a weaker peso. And most likely, if we're having higher inflation, the risk of higher interest rates. So how does it affect the Philippine stock market? So at the moment, we're currently seeing further consolidation between the 7,000 and 7,350. So looking at the present chart, we're seeing the market just consolidating near the downtrend line. So whether we're going to see a potential breakout out of the 7,350, and that could bring a move towards 7,800 to 8,000. On the other hand, failure to break those levels can again revisit the reset lows of around 6,950 or to 6,500. So the key message really is that we're in a consolidation. Again, what are the causes for concern? The new variants, inflation, geopolitics, and I think one of the most important aspects for 2022 is the overextended market. It seems that investors have not really digested the fears of rising inflation and eventually the exit strategy of the US and other developed economies. So what could go right in 2022? So for the Philippines, it's going to be a peaceful election, better pandemic management, the impact of infrastructure spending in the second half under the new administration, and of course, the continued return of revenge spending that could eventually propel growth to at least 6.5% for 2022. So let me just summarize our forecast. We're looking at a growth of around 6.5% for 2022 and roughly the same growth for 2023. The exchange rate probably ending the year at 52.25 and normalizing toward 51.50 by 2023. Moving on in terms of the equity market, we're looking at closer to 8,200 by end of the year. And probably that would eventually signal a continued uptrend in 2023. So once we break out of that consolidation. So let me just end this presentation by how do we ride the next wave of disruption. One is really appreciating our resources, meaning let's prepare for a potential entry in the markets, given that we're still in a consolidation. Know the risks ahead. I think I've highlighted the higher inflation, which will impact the capital markets, especially with the rise of the dollar, which will also affect currency. So the key idea is to continue investing. Hopefully we'll be able to look at bargains. So if there's a chance for the Philippines to probably return to closer to 7,000, that would actually be a good entry level. That would be very ideal. As consumers, we need to spend more, but wisely. And I guess the most important tool that we all have, we need to pray harder. Thank you very much, and have a pleasant day. Thank you.
Thank you, Mr. Jonathan Ravelas, for your presentation. And I'm back for the question for Mr. Azizul Hakimin. Mr. Azizul, are you still in monitor of the question?
Yes, I'm here. Yes, I'm here. All right.
Okay, this is a question for you. Do you think that our technology sector will recover soon? Please have a comment. Thank you.
I don't have chart here, but for if this question refers to Malaysia's technology stocks, when there's in Malaysia's technology stock is coming down, it could be a wave 3 down because of fears of inflation hike in US. So there is an intermarket analysis between interest rate and technology stocks. So with anticipation of that the Federal Reserve might raise the interest rate, that's why some technology stocks is affected, negatively affected. I don't have I don't have the charts here, but let me tell you, the recent drop is very sharp. It could be a wave 3 drop. That means that for Malaysian, maybe for Asia Pacific, I'm not sure about other country, but for Malaysia, you have to be careful with the technology stocks. All right, so we need to see the inflation, how the inflation is going in US, and what is the next Federal Reserve action on interest rate. All right, so it doesn't look good in the short term for technology stocks. All right, okay, that is my answer for that. So which sector will be bullish this year? This is from Malaysian also. According to my colleague, this we are looking at now energy stocks, because it seems like
thank you very much. And another question, yes.
Another question, they are asking me about which sector will be bullish this year. I think this one came from Malaysian participants. So from my discussion with my colleague, we see that the energy stock is outperforming, right? It's outperforming others, and the worst one is the technology stocks. So the second one is a consumer. Therefore, if Malaysian wants to buy some stocks, have to look at some consumer or energy stocks. All right. Okay, that's my answer. For
all right, thank you very much for the answer, Mr. Azizul Hakimin.
Yeah,
and let me introduce the next speaker. It is Mr. Nicholas Tan. He is an associate director for Forex and CFD with 30 years of experience in the financial markets. Prior to joining UOB Kay Hian in 2002, he had worked for 13 years as a Forex trader with major banks in Singapore, rising to vice president in the process. He is the author of 2 popular books, Handbook for Forex Trading and Handbook for CFD Trading. He has met guest appearances on TV program like Money Mind to discuss forex trading. Since 2007, he has given numerous talks and seminars in technical analysis locally and overseas for Technical Analyst Society of Singapore and other societies and organizations. Besides holding a bachelor degree in business administration from the National University of Singapore, Nicholas also holds a Chartered Market Technician or CMT designation from the Market Technician Association of USA. He is also a Certified Financial Technician or CFTE with the International Federation of Technical Analysts. Please welcome Mr. Nicholas.
Thank you very much. Sorry for the delay. Today, I'm going to talk about the market outlook, a view from time cycle. I'm glad I've chosen a path that is least taken by many technicians. You have heard about Elliott wave, you have heard about other techniques, but time cycle is something that is less common. So today, I'm glad I'll be able to share something with you on the time cycle. I'll be talking about time cycle. I'll be talking about the Dow Jones trend. I'll be also touching on the STI trend and also KLCI stock market, the index trend. All these will be based on mainly on cycle theory. So hopefully today, after today, you not only know the forecast, there are many other speakers with various forecasts. You know the forecast. I hope you can take home something that you can use in future. Cycle is something that's very interesting. I hope you will explore more about this subject in your later life. Okay, so let me get on to the introduction on time cycle. Time cycle is something that occurs again and again in our life, in society, in nature, as well as in the economy. Time cycle is an event that will repeat itself in the future. So if we can predict when this event will come about, we have a good chance of estimating where the market will top out and where the market will bottom. So it gives us an idea where to position our trades. Cycle, as I said earlier on, it exists in nature, it exists in the economy. When you look at time cycle, there is a nature cycle, you have the 4 seasons. These 4 seasons can also be part and used as part of a short-term cycle trading event. Many of us are taking or took the exam, okay, on the International Federal Technical Analysis. So you will have come across this book, Technical Analysis of the Financial Market by John Murphy. In the chapter, there's a cycle chapter, and quoting from the book, it says that assuming the cycle remains fairly constant, it can be used to estimate future peak and future low ahead in time. Take note of the word fairly constant. A cycle do not stay constant all the time. Just like a volcano, it doesn't erupt exactly when it is due. Sometimes it is later, sometimes it is earlier. So the important thing is we must be able to isolate that cycle find that it is fairly constant before it can be really useful. But the problem is cycles are not easy to predict. Cycles are hardly or ever constant. There are many other cycles. It affects each cycles. On the basics of cycle, this is cycle theory. Okay, before we start on the forecast, let me share something about the cycle theory. How do we estimate high and low using cycle? Cycle is most useful when we start from the low. If you pick one low and then you pick another low, it will determine the cycle period. So a cycle period is calculated from one low to the next low. So you have a cycle period. In this case here, this is a 7-year cycle based on the Singapore, one of the ETF, based on the index itself. This is a 7-year cycle. So the cycle is measured from the low point to the low point. So from there, you will know what is the length of the cycle period. When you measure the low to the low, the high is supposed to come in the middle of the cycle. But 90% of the time, the high do not come in the ideal location, which is in the middle. This is because usually market is bullish. It takes a longer time for market to go up, but it takes a shorter time for market to decline. Bulls are slower, bears are quicker. So usually the cycle high is towards the end after the 3/4 mark of a cycle itself. So from the cycle low, you can estimate where the high is. If you estimate somewhere around 3/4 cycle time, that will roughly be the high of your cycle high. So we have just come to the end of a bearish cycle. Back in March 2020, price hit the bottom, price starts to rise, not just on Malaysian, Singapore, or Indonesian stock market, but global stock market. So that could be used as a price low. And later I'll show you a chart that shows in the US Dow Jones, 4 years is the latest dominant cycle. Cycle, I've shown you a 7-year cycle, but 7-year cycle is not the only cycle in the market. There are many other cycles operating at the same time with the 7-year cycle. So if you have the 7-year cycle, you probably have a bigger cycle, which is the 10-year cycle. You also have a smaller cycle, which is the 4-year cycle. And short-term wise, you have the monthly cycle, you have the quarterly cycle, as well as the annual cycle. So many of these cycles operate together to control price. Okay, so let's take a look at the Dow Jones forecast using the cycle theory. This is a short 15 minutes presentation, so it is not possible for me to go into a lot of detail on the cycle. So if you are interested, there's a chapter on John Murphy book, which you can read up. There are also materials over the internet, which you can study. I'm sure the IFTA website will have many materials that you can make use of. So let's take a look at the Dow Jones. I start with the 7-year cycle theory. The 7-year cycle theory was what I've used since the year 2000. So from the year 2000, if you look at it, it has a fairly constant cycle movement, except when it comes to the year 2016. After 2016, it was supposed to bottom, but it actually bottomed ahead, or it actually bottomed just after. So if you look at it, in the year 2020, when price crashed and very fast, in 3 months, we have a bear market, and in less than 3 months, we actually exceeded the high of the US stock market higher before the crash. So is that really a bear market? If that is a bear market, it is the shortest bear market in history. So if you look at it using the 7-year cycle, the next cycle low is likely to be in the year 2023, which is about 2 years from now, or maybe next year. So if it's beginning of the year 2023, we probably have 1 more year towards the cycle bottom. So if that is the case, probably this year, we may see the market reaching a high on the US stock market based on the 7-year. But if you look at the current trend, the current cycle, based on the 4 years, which turns out to be quite accurate in the year 2020, if you look at 21.6, which is also a cycle low for the 7-year cycle, 2 cycles coming in together, normally you have a stronger force that will move the price higher again. So we had a nesting of the 2 cycle together in 2016. We have a bull market that went up. Okay, but this bull market is actually in line with the cycle theory. It top out somewhere in towards the end of the 4-year cycle, and in March 2020, it was just 2 months late compared to the 2016 cycle low. Okay, it was just 2 months late. The next cycle low will be in 2024. So a lot of people are asking, the Federal Reserve is likely to hike interest rate. Can the US market go up some more? So if you look at the cycle theory, it says that yes, the US stock market can go up some more. The stock market is likely to bottom somewhere in 2024, somewhere in the middle of the year, 2024. So where will the top be? If you buy now, is there still sufficient time for you to hold on, for you to make money? Most likely, yes, because from now 2020 to 2024, you're likely to see a peak in the index, the Dow Jones index, somewhere in 2023, in the first quarter, or maybe up to the second quarter. That could be the Dow Jones high. This is based on a cycle theory. So we know that market is likely to top out in 2023, but where and how high the index will be when it top out. So cycle doesn't really tells you where it will top out, but if you use the Fibonacci technique, I've done a Fibonacci projection here. The next level of Fibonacci projection will be at 4776. So let's say there's a possibility that we will see the index Dow Jones go up to about 40,000. That is about 10% price movement or index point movement higher over the next 1.5 years or 1 to 1.5 years. Okay, currently we are January 2020. If the market top out in January 2023 or maybe the first half of 2023 by June, we still have potential to go up by another 400 or 4,000 points in the Dow Jones index. Singapore, this is the 10-year cycle theory. Singapore and Malaysia, we share a common cycle theory, that is the 10-year cycle. 10-year cycle, I've been asked this question, the 10-year cycle or the 7-year cycle, which one of them is the correct cycle or which one is the better cycle? There's no correct cycle, but which one is the better cycle? In fact, if you look at it, 3 7-year cycle is equivalent to 2 10-year cycle. So when you have this 20-year to 21-year from a previous significant turning point, that year is likely to be very, very important. So currently, if you look at it, in 1998, we have the financial crisis. So the market top out or bottom somewhere in late 1998 to early 1999, somewhere in December 1998. And then you have the index going up, okay, until the high in low in 2009. In 2007, you actually have a peak in the index, and this was the time of the great financial crisis. It dropped down to about from October 07 until March 2009. And then if you look at it, 10-year cycle, in 2009, we were supposed to have a bottom. We are supposed to peak somewhere around there, but the market did not peak in until January of 2020, early January of 2020, and it collapsed. It was very significant because the price movement was very low, very sharp. And then we have a cycle theory that was later than when it was supposed to come in, not in 2019, but in 2020. So if we're gonna, the next low will be very far from now, 2029. So let's not look at a bigger cycle. Let's look at a smaller cycle. So if you look at a smaller cycle, we have somewhere around here. In 2021, we have supposed to be a cycle low, okay? But then again, the cycle low was slightly ahead because of 2020. 3 months in a bear market from Dow Jones, it pulled down the entire global stock market. So a lot of people ask, is Singapore, is Malaysia dependent on the US stock market? You have heard the saying, when the US sneeze, okay, the rest of the world will catch a cold. So again, they are very, very related. So for Singapore stock market, I think we still can go up. The important point is the 3005 level, and above 3005, we have 3750. That is the level that to watch out for. For this year, I think we can hit about 3520. Okay, for this year, I think the Singapore stock index can go up to 3520. An important confirmation for the Singapore stock index, if you look at your 3 banks plus your Singtel, if they are going up, it is a good sign that the index is likely to go up because they form a majority of the component. While our STI index did not make a major high, do take note that the 3 banks, especially DBS Bank, they are making new highs. Okay, so this is very important. For the Malaysian stock market, the 10-year cycle, again, if you look at the 10-year cycle, Malaysia, same thing, in 1998, in 2019, and then 2009 and 2019, you were supposed to have the bottom. But in Malaysia, the bottom occurs slightly later than the cycle low. Okay, let's take a look at the 5-year cycle. The 5-year cycle, we actually have supposed to hit a low in July of 2021. Now we are supposed to be going higher. So as the first speaker has said, he's bullish, or he thinks he's cautious. He's slightly bullish on the Malaysian stock index. I think I'm also bullish on the stock index. I think for this year, I see the Malaysian stock index going up to 1008 again. Okay, again for Malaysian stock market, the low is somewhere in the year 2026. 2026, if you take a midpoint of this, that will be somewhere in 2020. If you take 75%, somewhere around late 2024 to early 2025, somewhere out there, we will probably see a peak in the Malaysian stock market. Can it go up for 1.5 years to 2 years? Okay, we'll probably have to see from now. Okay, looking at the short-term Malaysian index, okay, price has actually moved above the Ichimoku cloud. Price has also moved above a gap that was created when price dropped below the Ichimoku cloud at this point here. So if you look at it, we have a very bullish sign from the Ichimoku cloud. There's a bullish crossover of the 2 lines, okay, and then you have a lagging span that confirms, okay, the G code that confirms the bullish trend, bullish crossover confirmed by the bullish trend. The only thing that you are a bit worried is we need to see the MACD indicator move up above the previous high, as price has already moved up above the previous high. If price do not go above the previous high, then we have an issue because it's going to create a divergent warning from the MACD indicator. Okay, so this is what I have presented, I prepared for you. Thank you very much for your time. If you have any questions, please go ahead. I will try my best to answer them.
Thank you, Nicholas Tan. And there are some questions for you. May I read it?
Sure, go ahead, please.
Okay, this is from Samim Haris. In your opinion, what do you think about the increasing of COVID-19 infection and where the market will be driven?
Okay, for the COVID-19 infection, I think the world is now going ahead with living with the pandemic. It is no longer a pandemic. We call that an endemic. That means it is something, it is part of life. We have to go ahead with it. The issue is, will the COVID-19 affect production? We have seen the COVID-19 affect ports in California. Goods are being delayed because there are not enough workers. In Singapore, we have seen that property prices has gone up because supply of new homes are not being built because of a lack of workers. So in a certain way, yes, COVID is likely to hinder supply and production. But I think going forward, the world will live with COVID. COVID is something that is prevalent in our society. How long it will go on, I really do not know. But I think the world is preparing to live with COVID. I give you an example. In UK, football is going on despite the COVID. Life goes on with COVID. So I think that is the motto of the world going forward. Okay, next question, please.
All right. All right. And the next question is from Samim Haris. Mr. Nicholas, for the cycle, is it same as the market phase, which means accumulation, markup, distribution, and markdown?
No, that is a bit different. The accumulation phase is referring to the general market. There is a stage in the market where in an uptrend, you will see, for the start of the uptrend, you'll see people, the smart money start accumulating. Okay, like the Dow theory. This is more of the Dow theory. You see smart money accumulate. You see investors come into the market. Stock price will go up. When it goes up, at the high, you see the smart money starts to distribute, then price will come down. Okay, time cycle is not about this aspect of technical analysis. It is a different aspect of technical analysis. If you look at it, okay, time cycle is something very similar to Gann. Gann says that a certain date from previous low, if you project it forward, it will hit a low or you will hit a high. Okay, so time cycle is something like this. Time cycle, if you use the phrase of a time cycle from one low to the low, this is one cycle. In the middle of the cycle, you should have the high. You can predict the high. If you know the amplitude of the cycle, you can even predict where price will go to. This is slightly different from the Dow theory, accumulation and distribution phrase. Okay, time cycle is an event that happened in history and can happen in the future. Something that has happened in history and given a certain date will happen again in the future. Okay, next question.
Okay, the next question from Yusra Yusuf. Mr. Nicholas, what is the dominant cycle for Nasdaq? Does it follow the Dow? Do you believe US presidential cycle can influence Asia Pacific indexes?
Okay, the first thing, the Nasdaq follows in the US, okay, the US, all the three stock components, they are very, very similar. You may see that the Nasdaq is coming down, the Dow Jones has been going up. But don't forget, it was the Nasdaq that went up first before the Dow Jones hit a high, the S&P hit a high. In fact, the Dow Jones was the last to hit a new high. Nasdaq was the first. So when Nasdaq was the first to hit the high, it is natural for Nasdaq to come down before the other two. So if you look at it, the 4-year cycle, which I mentioned earlier on, is it similar to the presidential cycle? You can say that it is similar to the presidential cycle, but it is not the same time period as the presidential cycle. In fact, the president was elected before. So it is quite similar. And also in the US, I know there are talk about the presidential cycle. There's also a 4-year business cycle. There's also a 4-year credit cycle. Okay, so all these could be similar, but it is not exactly the same science. Okay, I hope I've answered your question.
All right, and this is another curious question from Yusra Yusuf. Do you include time cycle and GAN to forecast the turning point in your analysis to have better convergence?
Okay, so for time cycle, I use it actually on a longer term basis. Time cycle is something that I use. If I'm going to buy a stock now, how many more years can it go up? What is my return? And if you are buying a stock, if you're holding a stock, you want to know when is the high. So I can estimate when is the high, so I can think whether I can buy or not to buy, I can hold or not to hold. Okay, I can also see where is the potential. For GAN, it is a little bit different. The GAN, I don't really use a lot of GAN because there are certain things that are not disclosed. Okay, so I really do not have the material to go in depth into GAN. For time cycle, I use it on a longer term basis. Short term basis, I actually use Ichimoku, I use MACD and Fibonacci, okay, for the short term basis. But you can actually incorporate time cycle as your long term and then other technical tools as your short term indicators.
All right, another one, this is from Yu Chong Lee. Is time cycle method suitable for mean reversion or trend following trade strategy?
Okay, time cycle, there is a good, there is a bad. In fact, there is no holy grail. Everything has its strength and has its weakness. Okay, so if you are going to use time cycle, you need to know the strength. The strength is it can predict, it can forecast when a high and a low will be, so you can time your investment. This is a strength. But do take note that there is also a weakness. Time cycle is not just about 4-year or 7-year. In between, there's 2 years. In further up, there's an 18-year cycle. So sometime when a longer or a bigger time cycle comes into play, it will affect the shorter term. So that is why you have your shorter or 5-year cycle example earlier on being pushed back by 1 year, up to 1 year. Some of just now was about 4 months for the some of those indices, but it can be up to a year, pushed back up to a year from their ideal turning point. So cycle by itself is good for estimation. It is not the perfect or not the appropriate indicator for you to use for your daily analysis because it is more of a long term. You may have short term cycle. In fact, there is a 30-day cycle for the Malaysian stock market, not just Malaysian, but Singapore stock market, 30-day cycle for this market. You can use it for short term, but again, it does not tell you where price will go to. Unlike the Ichimoku, Ichimoku can predict where price will go to. If it breaks this high, if it breaks above the cloud, it can go to this high. But time cycle can do that, but it is not as accurate as your Ichimoku indicator. That is the weakness of the time cycle theory.
Okay, the last question for you, Mr. Nicholas. What is the most challenging when using cycle analysis, and how do you overcome it?
Okay, the most challenging part of time cycle is on the short-term basis. On the short-term basis, if you are using a 30-day cycle, there's always a 60-day, 90-day, also the 1 year, 2 year, 4 year. So it is quite difficult to really predict where is the low coming in. So this is the main difficulty. But if you are using it for the long term, okay, if you're using the 4-year cycle, you know roughly 4 years down the road, this is the next low, and 2, 3 years down the road, this will be the high. You can tie in with your fundamentals. Now, if you're just a fundamentalist, if you look at the US interest rate, the US interest rate is going up. Everybody tells you that the stock market is going to come down, but the stock market has gone up. So you can use the cycle to help you to balance the fundamental view from on the market. Okay, that's how I would use it. Thank you.
All right, thank you very much, Mr. Nicholas Tan. And now we welcome Mr. Willan Art to have a brief speech.
Hello again. Now that we are somewhere in the middle of our little conference, I'd like to take the opportunity to invite you to one of our IFTA events. Again, we will have monthly webinars and workshops twice a year. As a member of one of our Southeast Asian societies, you have free access to our webinars and our archive and get a discounted access to our workshops. So learn more about the International Federation of Technical Analysts and visit ifta.org. But first, let's continue with our market outlook.
All right, thank you, Mr. Willan Art. And now, without further ado, we will continue to the next speaker. Let me introduce Mr. Zulraidi. Dr. Zulraidi, PhD, MSTA, CFTE, is a reputable technical analyst from Malaysia, recognized for his specialization in GAN technique and evaluation in conjunction with the aid of using his robust historical past in physics, high energy physics, and particle physics. He additionally offers lectures at technical evaluation preparatory programs, MSTA diploma program, UK STA in GAN's chapter. Now we welcome Dr. Zulraidi.
Wabarakatuh, and hi everyone. Best regard to our coordinator, IFTA President, Director Mr. Indra, Moderator Mr. Arya, lineup of speakers, and all my beloved attendees. I'm Zul from Malaysia. Thank you for joining this market outlook for the year 2022 session conducted by International Federation of Technical Analysts, IFTA. I am really honored to be invited to speak via Zoom online today at this market outlook session, and grateful for the opportunity to share my personal view indeed. This is the best platform for experts or analysts or traders to express or to get some ideas in market behavior, where various views and analysis will be presented. It is a great program. The financial market is highly volatile. Without technical knowledge, we tend to make investment decisions based on ill-timed media headlines or emotion. Two years into the COVID-19 pandemic, Malaysian economy is now coming out of its trough after shrinking last year. It is on the path to recovery in this year, supported by the reopening of economic and social sectors. The worst flood in decades in some states, especially in Selangor, Malaysia, have tempered the recovery in late December last year and early January this year. 2021 has turned out to be a roller coaster ride for the equity market, with the FBMKLCI, which started the year at 1602.57 points, settling at 1537.8 on December. Year to date, the benchmark index has contracted 5% compared with 1627.21 points on December 2022. As we entered 2022, how will this year fare? We estimate real GDP to grow by 5 to 6% in this year, an improvement from the estimated 3.4% in last year. This is in line with the government's projection of 6% under 2022 budget. The Bursa Malaysia Kuala Lumpur Composite Index, FBMKLCI, along with major regional bursa, began the year on a softer note amid bullish sentiment due to the economic reopening since last year. Since then, the general mood and sentiment have turned positive. People mobility and traffic indicators have been showing signs of revival despite concern about the Omicron variant. ASEAN recovery will be a bit gradual. ASEAN market seek the top 4 in terms of valuation. We have Malaysia, Indonesia, Singapore, and Philippines. Indonesia experienced its highest GDP growth in the last 17 years after suffering economic contraction in the preceding 4 quarters. Although encouraging, Indonesia's high economic growth in the second quarter of 2021 is not much of a surprise. They expect the country to see improved EPF revision momentum and a stronger rupiah. Singapore is an inflation winner due to its high sensitivity to inflation. The central bank unexpectedly tightened its monetary policy last meeting in October amid mounting inflationary pressure caused by supply constraint and a recovery in the global economy. Malaysia has strong currency potential, but lack the structural potential compared to Indonesia and the Philippines. Malaysian ringgit, we expect the ringgit to strengthen this year, backed by a better growth outlook for the domestic economy, supported by current account surplus and higher commodity prices. Small capitalizations. Bursa Malaysia Small Cap Index stock in Malaysia have continued their run-up from last year into the first few months of 2021. Retail investors are drawn to small cap stocks, in part because these counters appear cheap and affordable. Having said that, there are hidden gems in this segment. Although small cap stocks tend to be more volatile and riskier, they may offer higher growth potential relative to large cap companies. Small cap sector has the potential to continue providing alpha or excess return on investment for investor. We remain positive on Malaysia's small cap sector. Malaysia Benchmark Stock Index, FPM KLCI, ended last year down to 3.7%. In comparison, the US S&P 500 index rose 26, almost 27% in last year. We will see the negative correlation between them. KLCI underperformed compared to its benchmark last year, but we hope it will replicate by this year. The Malaysian stock market is the worst performer in ASEAN and the second worst performing market in Asia after Hong Kong. Having lost about 3.7% last year, the negative return generated by the 30 stock index were due mainly to the decline in the share prices of cloth, energy, and palm oil companies. Given that Malaysia's economic recovery has remained intact despite Omicron fears, coupled with anticipated corporate earning improvement, it will be a better year from Bursa Malaysia this year. Hence, we expect the local equity market to stabilize going forward as the current weakness in the KLCI has fully priced in some negative news, including stamp duty hike on contract notes for trading of share on Malaysia and Bursa Malaysia, and a removal of tax exemption on foreign source income that was announced during Budget 2022. Financial institutions are expected to benefit from a potential rate hike this year. For growth stock, technology sector as a prospect of technology, company remain intact given the rising demand for semiconductor chips. I think the current palm oil price and Brent crude could marginally extend support to a stronger ringgit and market, as we believe prices for both to be volatile. The Bursa Malaysia, also known as the KLCI, KLAC Kuala Lumpur Stock Exchange, is a major stock market index which tracks the performance of 30 largest companies by full market capitalization listed on the main board of the Bursa Malaysia. Referring to the chart, despite the share price is in downtrend mode, in long-term view, KLSE is trading above the ideal support level, balance above 45 degree within square of 90 in medium terms outlook, portrayed the upward movement still intact. With the next critical date here, we expect the next turning point by end of March 2022. Indonesia Benchmark Stock Index, Jakarta Composite Index, grew 10% last year, a good performance after a volatile and highly uncertain 2020 when the COVID-19 crisis emerged. At around 6,500 points on the first trading day of 2022. The index remained at near record high territory. Mercury changes to Aries and conjunction with Mercury degree positions look promising. This is 3-day chart for Jakarta Stock Exchange. This is GAN tool, Andrew Pitchfork. This is anchor line. Jakarta Stock Index is trading within warning line in Andrew Pitchfork, where it's not a good sign for this index. We expect the share price will take a short break before continuing its movement, although there remain plenty of uncertainty as we enter 2022. We are optimistic that this year will become a good year for Indonesian market. The Philippine Exchange Index increased 185 points or 2.6% since the beginning of this year. Philippine Index was completed the first range in third harmonic cycles. Previous high. Gradually, increment looks clearly and firm, signify that PSI index will find the previous high. Look at here. GAN 144 number range. GAN call 144 is most important discovery. 144 numbers of bar. It's doing very well in this index. Okay, back to local bursa. Now we will discuss in cycle perspective. GAN believe that history repeated with the financial market moving in mathematical cycle.
Hello.
The blue line takes that philosophy to help determine this cycle, the potential turning points in the market. It's calculating the daily performance for selected years and average the daily percentage change for each day. The last 10 years, 20 years, 30 years, 40 years are average. For 2022, we considered the historical daily percentage changes in 2012, 2002, 1992, 1982, and then average them. The average high of those years occurred on March to April, with other turning points shown. We will see here the peak, trough, the peak, and trough. Let's look here. We have time cluster zone. End of March, on average, those years closed 10% higher. Okay, we move to more interesting analysis, the method. Mathematics is special and interesting for me. We need to validate the projection by statistical approach. Neural network testing is a mathematical procedure of modeling existing process, processing complex data, and derive specific patterns. Okay, here is the result of KLSE by mathematical analysis. The machine learning neural network generating projection line based on different models. The strongest cycle shown here 171.1 days, followed by 240.1 days and 222 days. Please pay attention to the correlation here. You will see the correlation between the price projection line is almost 88.5%. Meaning this line, green line, quite significant or valid. We can see the parallel line, red line, and the green line goes in the same direction from early 2022 until April to May. If we know how the price moved in the past, it will give us some clues to the future. When we compare KLSE with certain and different periods, there is some similarity between 2018 to 2019 with a correlation 0.655. The red line is the pattern and the green line is the composite pattern. We can see here KLSE replicated, most likely replicated the pattern. Pay attention to the moment when all or majority of the price chart used for comparison point in the same direction. If all lines show the same movement, we have a strong confirmation regarding this future movement. It means that a strong possibility exists that KLSE might go in that direction as well. So we have some clues for the future movement for KLSE for this year. Here is the price projection for KLSE. As mentioned before, that the ASEAN market will recover gradually. Since KLSE ever reached the highest peak before, it's more easier to us to determine the strong support and resistance, target, etc., with some additional element such as Fibonacci and square of 9 level. The price movement respect the 30 to 45-degree increment level in Gantt square. For short-term trader, the immediate resistance is at 1588 to 1605. Support level pegged at 1472.75. Medium and long-term target based on the confluences of resistance 1716 to 1740 zone from medium-term target price, and the maximum projection at 1865 to 1925 for the long-term target. It is not stated here. We can't see the highest level at 1925 here. We expect FBMKLCI to touch 1,800 in 2022. Right. We have strong justification that the financial market, the local equity market, was expected to trend higher this year in anticipation of corporate earnings growth resumption following the unprecedented 2020 that was struck by a global pandemic, the likes of which had never been experienced before. However, contrary to expectation, There were political uncertainties as well, as concern over new taxes introduced under Budget 2022. And after the Delta scare, Omicron emerged toward the end of last year, and fear of new movement restriction to counter the new variant shadowed the equity market. This chart will give us different perspective. This is KLSE by astronomical analysis. Look at here. We have percentage with high correlation, almost 90%, or 90.4% to be exact. This is neural network process to produce the projection. Generally, Mars and Venus were used in planetary spectrum for astronomical cycle, with 14 terms and 407 input for neural network has generated. Mars and Jupiter give a significant correlation at 0.6207, followed by Mars position itself. KL Stock Exchange has an impact by this planet. This chart projection should not underestimated. We agreed before that developed market towards into the first quarter or 6 months of this year. The projection line of neural network show that the market start to rebound after first quarter of this year, instead by the early January, as what we discussed before. In conclusion, no matter what we think, the only difference is in the projection of the first quarter, which is certain that the market has the ability to strengthen again this year. The regional financial market is anticipated to continue to be vibrant by significant improvement in global trade, stabilized commodity prices, containment of the pandemic, and gradual improvement in consumer and business sentiments. All right.
Is it the end of presentation? All right. Address it is the ending of the presentation. The question and answer may be collected as you click on the Q&A button. It will be answered later. Now let me introduce the last speaker of the fifth speaker is Mr. Muhammad Maki Danditra, and also known as Dandy, has been working in investment-related jobs for more than 10 years in at least 2 industries, securities and insurance. He is now an investment manager in an insurance company managing $33 billion in the stocks and bonds market. Most of the time, he uses active swing trading strategies to meet certain investment objectives. He has been learning data science and machine learning with R to make market analysis while still coding the old Army Broker technical analysis software. He uses data visualization as part of data science to deeply understand the market movement. He also tries to combine data science and technical analysis. Dandy is a holder of Certified Financial Technician, CFTE from IFTA, and also the winner of Bronwynwood Award in 2011. Please welcome Mr. Danditra.
Okay, thank you, Pak Arya. I cannot start my video.
Oh,
Maybe
tidak.
because yeah, no, I mean maybe I was the warning said you cannot start your video because the host has stopped it. Maybe maybe the host can turn it on for me.
Wait a minute. Let me check. The host is Miss Linda Benetti.
Okay.
Can you please allow Mr. Dandy?
Okay. Hope everyone can see me now. While I'm trying to share my presentation. Okay, I hope everyone can see my presentation material. If so, maybe I can start my presentation. So
yes, we can see clearly.
Yeah. Okay. Good evening, everyone. My name is Dandi, and before I start my presentation, maybe I should warn you that I'm sure my English is quite good, but that's not me that should judge, right? So before you get confused with my English, so I have to say sorry if this mic get you more confused. Okay, so I start my presentation. Basically, I try to share my idea to inspire everyone. I used to code. I used to do coding in my AMI broker, but recently I used to code with R to do data science. And this is in this presentation I try to inspire, to give some inspiration in coding with AMI broker. And in this presentation, I try to share how to find stock and sectors that will outperform GCI in 2022. So in this presentation, I focusly on local index, local stock, which is Jakarta Composite Index, which is in Indonesia stock market, since I'm from Indonesia. But hopefully, the method that I use in this presentation can give you an idea and inspiration to conduct the same method in your local index. So without further ado, I continue my presentation. Okay, custom index. This means that this is the index that we usually see, like in S&P 500 or Dow Jones. Maybe for us, if we learn how to create the S&P 500 and the Dow Jones, there is a different formula in creating those index. For Dow Jones, maybe we can check that Dow Jones is created using the price weighted formula, while S&P 500 is created using market weight index. In this custom index, I use the same formula like Dow Jones, which is price average index. Why the name is custom index? It's because this is the index that I created myself. I mean, IDX, Indonesia Stock Exchange, recently changed recently they create a new index. I mean, sector index like bank or consumer stock, and maybe a commodity index, something like that. We can use that. We can use those indexes, but since we are trying to understand the market, so I think it's better if we create our own index, so we can understand more. We can see what we want to see. So that's why this is the custom index that I created. Mostly I use 80 stocks that are included in IDX 80, and this is the index that I mentioned. This is the index that IDX created, I mean, in the last 3 or 5 years. Consists of 80 stocks that are most liquid and fundamentally good. From the 80 stocks that are included in IDX 80, I create around, I don't know, maybe 15 custom index. And from those 15 custom index, I divided into 4 related area. So for the bank and residential stocks, I included in the interest rate related, and there is also infrastructure related, of course, commodity related, and consumer related. So the custom index that I created are shown in here. This is all the custom index that I created. And from this custom index, I try to find what are the sectors that might outperform the GCI, the Jakarta Composite Index in 2022. How do I do that? I use ratio charts. Maybe I think in Mr. Zul's presentation, he has mentioned the relative performance. Yeah, that's the same ratio charts. I use the name ratio charts instead of relative performance because I think it's easier to say ratio charts. So basically, it's the same. Just to give you a refreshing, what is ratio chart? It is a chart that compare 2 charts. So if we have price A and price B, in order to create ratio chart A and B, we simply divide price A with price B, and then we get one chart. We get one chart. So that chart is called RC chart or ratio chart. Ratio chart. If the RC chart is up, so that means A outperform B, and if the RC is down, so we can say that A is underperform B. So we just have to find which the RC chart is up, and we just have to avoid the RC chart that is down. How to do that? We can apply the simple technical analysis method that I believe we always use it. In my presentation, I use only moving average 22 days. Yeah, in this presentation, I use, of course, I compare it with GCI, Jakarta Composite Index. So I compare the custom index that I created, those around 15 custom index that I created. I compare it to GCI, and I try to show you the chart of those custom index. And this is all. Please note that this is a ratio chart from the custom index compared with GCI. So here are the charts that you can see. I use moving average 20 period, and this is the weekly chart because we want to see the long-term charts for whole 2022. So I use weekly chart. Basically, this is all the charts that I think we all have own perspective, but to make it simple, I just compare the price with the moving average 22. So if the chart If the price is above the moving average, it means uptrend. If the chart is below moving average 22, then it means the chart is moving downtrend. So we try to pick what custom index that now above moving average 22, and we try to avoid what custom index that are below moving average 22. Because, of course, if the ratio index, if the ratio chart is above moving average 22, that means the custom index, the sector, might potentially outperform the GCI for a whole 2022. And if the custom index is below moving average 22, then it means the sector will underperform. Okay, this is all the chart. Maybe if we look at this infrastructure related sector like cement, RC construction, industrial area, in the glance, if you don't do analysis, just a quick look, you can see that the chart, those three charts show the condition downtrend, right? So it means that in 2022 you want to avoid this sector, because although this sector might go, the price of the cement stocks or construction stock go up, it will underperform the GCI. So if the price of the industrial area stocks goes up, it will raise less than the GCI. Because what? Because the stock, those three indicate it underperforming the GCI. So you want to avoid that. Even though the price might go up, it will not rise better than GCI. So this is the meaning of underperform or outperform. So we want to find the stock and sector that will give better return than the market itself. So from this chart, I try to summarize all of the custom index that I create. So this is the summary. Ratio chart with GCI, the bank, is above MA22. So it means that it's now should be outperform the GCI currently, and potentially it will outperform GCI for the whole year. This is the meaning, the condition. And then the next column, MA2 short-term direction. As we can see that we can also analyze moving average by looking at its direction. So if the direction of the moving average is up, it means the price will uptrend. If the direction of the MA22 goes down, it probably indicate that the price is downtrend. So I look at the 6 to 12 months period. So these are the summary. So the bank, the MA22 short-term direction goes up, so it is good. And the residential, the property sector, mostly for housing, it's in sideways, which is mostly not good. Cement sector, the MA short-term direction goes down, so this is definitely not good. In this table, I try to rearrange. So I try to arrange based on the condition. So bank, coal, and pharmacy, all these ratio chart are now above MA22, which means that these three stocks, these three custom index, or these three sectors Now it's outperforming GCI and might still probably outperforming GCI for this year because they are now above MA22. But if you look at the short to medium term, only the bank and coal sector that shows upward movement from the MA22. So I tried to pick the best sectors currently and further. So in my view, these two sectors might potentially outperform GCI in this year. And if you look at this, I mean, I try to use this different language. Yeah, I try to different word for this column, condition and MA22 short-term direction. Yeah, above MA22, I'm trying to say it's oh, sorry. I think condition should be outperforming trend, where momentum should be in here. So pardon me. So I just you have to condition outperforming trend, where MA22 short-term direction should be called momentum, outperform momentum. So if you look at this, I believe it's starting to look like a relative rotation graph. If you're familiar with this method, this is one of my favorite one because I get inspired by Mr. JD. And okay, so now this is the sector that I predict will outperform GCI in this year. And now how to find the stock that will outperform the GCI. I will look at the stock from the sector that I predict will outperform GCI, of course. So I will only look of the stock, the bank stock and coal stocks, because these sectors I predict will outperform GCI. It doesn't mean that like telecom stock or CPO stock will not goes up. Maybe it will go up. Yeah. Maybe we can get a good return this year in construction stock maybe. But then since I predict the sector will underperform the GCI, it means that there are possibility that your return from mineral stock like what is called, or cigarette stock, maybe you get return, you get huge return from the stock this year. But since this sector will underperform the GCI, your return will be not as good as the market itself. So you still get underperform performance. That's what it means. So that's why I try to pick the best stock from this sector. And how to do that? Again, I use ratio chart. I use ratio chart method. Now I try to compare the stock itself to its sector index, to the custom sector index that I created. So like this, BBCA is the one of the bank stock that I included in creating bank sector index. There's a BCA, BRI, BBNI, and the summary. Again, I try to summarize so you can easily find the summary. The stock that could outperform sectors, the stock that could outperform the sector that already and might outperform GCI this year is BCA, BBCA, BBNI, ADRO, and ITMG, because if you look at this one, BBCA, it clearly it's an uptrend, and the price is above MA22. So no argument here, of course. And BBNI, well, some of you might argue this is still downtrend, right? Okay, fine, it's still downtrend, but don't forget currently the price of RC BBNI is above MA22. So I don't think there's no reason to pick BBNI because of this condition. And for the coal stock, this is the ITMG. Okay, yes, maybe ITMG currently is in the below moving average 22, but it's clearly uptrend from the last end of 2021. So we can argue, but I believe the ADRO and ITMG will also outperform, not only outperform the GCI, but it will outperform the coal sector itself. Okay, in summary, the sectors that potentially outperform GCI in 2022 are bank, coal, telecom, CPO, oil and gas, and residential. But my pick is bank and coal sector, because in the end, it's all about finding the outperform trend. You can pick the sector that are now in underperform momentum, because it might temporarily underperform, but since they are in the outperform trend, it's like you go find the stock that are in uptrend, but currently it is in the technical correction phase. So momentum means in my term, yeah, in my method, momentum means that it's just a short term movement. So it's still okay you buy the stock that are now falls, as long as the trend, the longer term, is an uptrend. So try to find the stock that is now, try to find one that are now in outperform trend, although they are in the currently in underperform momentum. It's okay, but make sure you buy it after the momentum turns from underperform to outperform. So okay, so the sector that potentially outperform DCI are these sectors, but my picks are bank and coal sectors. And among those bank and coal sectors, I pick BBCA, BBNI, ADRO, and ITMG. Okay, I think that's all from me. And again, I'm sorry if my English get you all more confused, but I hope you are inspired by this, and maybe there is time for Q&A.
Thank you, Mr. Danditra. Now we are come into the Q&A session. This is a question from Yusra Yusuf. Mr. Danditra, nice correlation index that you have created for Indonesian markets. My question, do you consider alpha with certain look back period in your coding to get the best portfolio management in 2022?
Okay, I'm trying to understand the question. Okay, maybe what Mr. Yusra means is that okay, of course I consider alpha. But mostly in generating alpha, I try to okay. In generating alpha, I try to find the stock that will outperform the market itself. And I think that what alpha means, right? You try to get return better than the market itself. So that's alpha means. In my coding, since I use price weighted average, so I think there is a limitation in the formula on how to create price weighted average, right? Because you consider everything. You consider you didn't consider the market weight, market cap. So so there is, so when you think like maybe for S&P, yeah, for S&P 500, when you look the Google stock as the same as the Zoom stock, I know that there's a huge different market cap between Google stock and Zoom stock, right? So instead of picking Google, you pick Zoom stock, and that might get you the underperform portfolio because of different market cap. I think that's the one of the thing that we should consider in constructing portfolio using the method that I use. And since I cannot code, since I cannot do coding that include market cap, I think that's a next level coding, next level programmer. I'm still trying to study the programming. If you want to get a better result, I think we should consider the market cap. So I think we should consider in creating a custom index using weighted market cap weighted average, something like that. I hope that's answer your question.
Okay, thank you very much, Mr. Danditra. There is still another question from Yusra Yusuf. For novice chartists, what is your recommendation for the platform or software to construct indicator or strategy to study?
Actually, I get I get this kind of idea. I get the idea, of course, from RRG. I get this idea from RRG method, and the RRG method that I find.
Wait a minute, there is a noise. All right.
Okay, thank you. So I saw the RRG method in Bloomberg actually. I saw the RRG method in Bloomberg, and then I studied the RRG method, and that's how I found the custom index that are so easily created using Bloomberg. But since I think Bloomberg is not accessible to anyone because of the price, I tried to code using iBroker, and then the code that I found now is only the price weighted average because of the data. It's because the data constraint too, yeah. Because if you want to create a market weighted average, it takes more data and more coding. And I think my constraint now is data. But if you have access to Bloomberg, I think you can easily create it. Custom index with many formula like price weighted or market cap. Just go to CIX Go in Bloomberg page, and it's a Bloomberg application, not the Bloomberg.com. Okay. Miss, I think it's Miss Ika, yeah, Miss Ika. Okay. In determining my sector pick, of course, in real life, in my office, in how I construct portfolio for my job, I consider many things, not only technical but also fundamental and economy. Of course, because my boss will kill me if I only have technical reason, right? I have to use as many as analysis as I can. So yes, I also consider fundamental aspect in my real life stock pick, but in this presentation, I simply use technical analysis because I believe it's enough. But then don't do that because I use fundamental too in real life. And
okay, one thing I want to check with you, Mr. Danditra, is it
yes.
MA 20 or 22? Like you said 22, but in the presentation, it was written MA 20.
Sorry, Mr. Arya, I cannot. I think my connection is not that smooth while you're talking.
All right, I'm checking whether you use the moving average 20 or moving average 22.
20.
Okay,
Okay,
because
20.
yeah, all the time you mentioned 22, but in the presentation it is moving average 20. All right, thank you.
Yes.
And continuing the question from Ika Sagara, will just be using moving average is sufficient to determine the stock pick? Is it good enough to hold for 6 to 12 months?
Okay. I mean, of course, it might be not sufficient, right? It's not enough, but in the end, from the presentation that I show you is maybe the summary, the table of summary, because finding the stock or sectors that might outperform the market, it's like it's not a simple question like if the stock goes up, if this stock it will go up or it will go down. It's not the same like that, right? It's you have to see the whole picture. You have to see the whole market. So that's why the main point of my presentation actually is not the slide that contain charts. The main point of my presentation is the table of summary, because from that table, I'm trying to understand the market itself, the whole market. I'm lucky in GCI, Jakarta Composite Index, there's only 700 stocks, and I think most of them are not tradable, right? Because of the market cap. But if you trade US stock, there are 1,000, I think, 1,000 stock that are tradable that you can pick, and then you have to see the whole picture to pick the good one. So mostly and in this presentation, I'm trying to think how to get a better understand of the market movement. So instead of using deep and more complex analysis for one stock, I'm trying to use the simple but powerful method that I can summarize into more powerful whole insight. So that's why I use simple moving average. Okay, any other question?
Okay, the last question, may I know if there is any back test on the custom chart methodology? It is from Aiman Samsul. Is there any back test?
Back test, I'm not sure, but I try to back test for a while, and well, of course, if you do back tests, it very depends on the method and the system that you create, right? Some of my back tests ensure me, some of the back tests makes me believe that this method works, but most of the time, maybe it's because of the time frame that I use, yeah. Because I think my last back test that I created is last year, and it's only for a short-term period, which means in GCI term, since 2008, from 2018, I think GCI is it's downtrend, yeah. So it's very hard to find the stock that good. And I don't really like backtest because it's the past. It's the past, yeah. But yeah, I'm trying to do more backtests, but I don't do that a lot actually. So I don't really do that, but I believe there is a backtest data from this method.
All right.
Okay, I hope that's enough.
Yeah, there are more questions to come, but it is the time limitation that we have. So this is another 2 questions. Maybe you can just have a brief comment.
Okay.
Mr. Danditra, so that you only used MA20 to identify high momentum stock, right?
Yeah. In this MA22 is same like Mr. John Bollinger, because I really remember what he said, that don't try to change middle band Bollinger, which is MA22, right? So okay, I'm not gonna change my MA22. That's because that's reason.
The last for the closing, do you let the machine forward test for your coding?
Yeah. I try to use that's the basic method from machine learning to do the fast forward. I mean, like Monte Carlo, if I'm not mistaken. Yeah, that's the same. I use that, but I think it takes a whole time and energy to do back tests, which sadly I don't have time yet, but it's in my agenda. Maybe next time I will try to show my result. Yeah.
Okay, thank you very much, Mr. Danditra, for the presentation and the Q&A session. And we come to the end of the event, and I will let the president of IFTA to have the speech closing. Please welcome Mr. Willan Art.
Thanks for joining us today. We had a deep dive into today's market, and I'm sure you can make a good use from it. I also like to thank our experts from Indonesia, Mr. Danditra, from Malaysia, Dr. Sulraidi and Mr. Azizul Hakimin, from Singapore, Mr. Nicholas Tan, and from the Philippines, Mr. Jonathan Ravelas, for their insights and bringing their knowledge to us. Now, I hope that we see each other again very, very soon, in person, online. Join IFTA in one of our member societies. Visit ifta.org for more information, and please don't hesitate to contact one of us if you need any more information. Thank you so much, and all the best to you. Your Wieland Alt.
Thank you, Mr. Willan Art. And now come to the closing, Mr. Indra Rangkuti as the director of IFTA.
Yeah, hello. Thank you for joining us today. We are very happy to having all of you here. As we have seen today that how we apply technical analysis method to give you the insight of the market outlook of 2022. I believe now that everyone knows what to do for this year to manage the risk, the investment, and the portfolio. It is clear that is us, the IFTA, and all the local society in your country will guide and assist you to learn and train to be an expert as a technical analysis in the proper way and the right way. Lastly, we still have more webinar even coming. Make sure you all already registered as an IFTA member and local society member, so you all can be more updated about the market situation and condition. On behalf of IFTA, I, Indra Wijaya Rangkuti, Board of Director of IFTA, would like to thank you and appreciate to all of the local member society, all the speakers who helped that this webinar could be happen and succeed. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, everybody, for joining the Market Outlook 2022 Breakout Recovery. See you again in the next event of IFTA Southeast Asia. Good evening.
Thank you.
Bye.